But let's go ahead and get in the first topic. As always, talking about mining. Bitcoin miners halt sales as Bitcoin gains 20% since hash ribbon buy signal. So this article goes over Bitcoin accumulation by miners is back as network participants swap selling for holding at $75,000 lows. Data from on-chain analytics firm Glassnode shows that miners are now actively adding to their Bitcoin reserves. Bitcoin hitting multi-month lows in April sparked a sea change in miner behavior, with a lengthy selling streak reversing into significant accumulation. Glassnode shows that shortly after Bitcoin bottomed just below 75,000, the balance in miner wallets itself found a floor, only to then start increasing along with the price. Miner wallets held 1,794,622 Bitcoin on April 12th, while as of May 13th, they had reached 1,797,330 Bitcoin, an increase of 2,708 Bitcoin or 0.15%. While minimal in terms of total miner holdings, the turnaround is conspicuous as it follows a run of selling that initially gained momentum in late 2023. This in turn has led to optimism over the Bitcoin price trajectory. Extremely bullish for Bitcoin is what a trader and investor named Mr. Crypto summarized in a reaction on X, referencing similar data from on-chain analytics platform CryptoQuant. Earlier, Cointelegraph reported on decreasing miner sell-side pressure, helping contribute to price trend, with institutional buy volumes dwarfing the amount of mined Bitcoin per day. A classic metric covering miner behavior continues to display classic performance since its latest buy signal. Hash ribbons created by quantitative Bitcoin and digital asset fund Caprioli Investments uses two moving averages of hash rate to delineate periods of capitulation among miners. Since offering its last market entry tip in late March, Bitcoin USD has gained around 20%. Quote, "The hash ribbons are still flashing a buy signal here," Mr. Crypto commented in a post on the phenomenon this week, predicting Bitcoin price to go much higher in May. So, here's the interesting part. As a whole, I would say it's clear that we're still following that traditional halving cycle. We're seeing suppressed prices. I talked about this last week. I think, the all-time high range this cycle is nowhere near what the original projections would be around that $200,000 mark. It is much closer to that $120,000 to $150,000 mark. And we are running out of time for the traditional halving cycle impact. But there is still evidence, as seen in this article and the accumulation from miners, that miners still influence the price of Bitcoin, albeit not by as much as they have in the past, due to the fact that, of course, there's waning block rewards, and that will only be less and less impactful, the halving that is, as we move forward through this new innovation of cryptocurrency and all of that. So I think when we move into the next cycle, we'll probably see even less impact on price. Of course, we could say macroeconomic factors are impacting this as well. I'm not so sure. I think maybe for the low end of side of things, but not for the top end side of things. And that's because, like I said, as there's less block reward for Bitcoin for miners, there will be less of an influence of mining on the price of Bitcoin, which will be a lessened euphoric spark, right? So the euphoric spark comes from the depreciation of the supply, the release of supply into the market, right? And so that as less and less of that is impactful and the price of Bitcoin stabilizes based off of what's in circulation, then that's how that would play out. Similar to, obviously, on a much faster timeline, something like kaspa, where it's clear that the holders of the cryptocurrency itself influence the price a lot more than the actual miners themselves. And this is just the nature of the beast when you're talking about the supply cut, right? The reward of the halving, or the reward being cut in half from just the nature of the way mining works in most cryptocurrencies. I think that's why we're not seeing as much of an impact more than the macroeconomic factors. I think the macroeconomic factors obviously are impacting miners directly from the idea that like we aren't seeing US side miners stay as efficient as, you know, abroad miners. Luckily, from the USA perspective, like we've talked about in the past, it really comes down to energy cost over cost of miners. It's just a matter of getting the miners stateside that has potentially affected it as of right now. So that's kind of how I look at it. I hope you enjoyed this clip from the Crypto Mining Show. If you would like to see more from this particular episode, take a look up here. Don't forget to also subscribe to the channel. And if you want to support me directly, you can go to sonofatech.locals.com and become a member. Thanks for watching, and I will see you next Tuesday.